Ladies and gentlemen, what is going on? It's Monday morning. Stock market opening in 45 minutes. Hopefully, everybody had a good weekend. Thank you all for being here. Really appreciate it. Ray, what are you doing up this early? Ray, it's early for you. I hope you had your morning coffee. In the streets, what's going on? Rusty, Parzival, Lena, this early in the morning. Chels, what's going on? Duns. Thank you, everybody, for being here. KK's here. All right. A lot of stuff going on. Hollis is up early. Craziness. Thank you, everybody, for being here. Really appreciate it. Before we get into it, read the disclaimer. I am not a financial advisor. I am not your financial advisor. Please do your own due diligence. And always remember, this is for entertainment and educational purposes only. With that being said, let's take a look at what's going on in the market. Let's see where everything is landing, where everything's shaking out. One of the companies that I think is, maybe a little stretched is up a lot this morning, 10.2% pre-market. Space Mob is rallying. Rocket Lab and ASTS are at the top of my list. 10% for Rocket Lab, 6.75% for ASTS. Oracle, 153, up 3.47%. IREN is up. Palantir is up, 116.51. Zeta Global, 1950. Nibius, 246. ServiceNow getting back over 100. Broadcom up $8. SpaceX up 3. Meta trying to make a move, 560. Robinhood over 100. CoreWeave trying to make it back to 100. Microsoft, 379. Rubrik, $1.17. Qualcomm, 192. Reddit moving a little bit, 169. SoFi is over 18. We got oil hanging out just below 70. We got Amazon at 235. NVIDIA still being extremely disrespected, ladies and gentlemen. Disrespected. QXO under 18. Tesla up 2. A lot of green here, ladies and gentlemen. What's in the red? Micron in the red just a little. This could be a really good day. Let's get on with some news. I think the news of the morning right now, besides oil, we're going to talk about oil a lot. Let's start with the Comcast news. Comcast is up a tremendous amount. Let's bring it up on the chart. Chris Patel's got to be really happy right now. 23% for Comcast. He pitched this on a Monday edition of Inside the Numbers. This was paying a 5% dividend. And what's happening? Comcast plans a tax-free spinoff of NBC, Universal, and Sky into a separate publicly traded company. That is extremely bullish because, look, you potentially unlock value on that and you put an asset on the market that has the power to potentially be acquired by another company. I think that this deal makes a lot of sense with the spinning out. I mean, Comcast is going to keep the connectivity. They're going to keep broadband. They're going to keep wireless and business services. NBC Universal will consist of Universal Studios and its theme parks, NBC, Telemundo, Peacock, Bravo, and Sky in Europe. So Comcast will retain a 19.9% stake in NBC. I think it makes sense. We see what's happening with TKO Group. TKO is going up. We saw the acquisition of Warner Brothers, the rumors about Lionsgate. I do believe that this is a great move. I do believe it's a great move. We'll see what happens. We will see what happens. But you know what? There's always a bull market somewhere, as Jim Cramer wants to say. Now, here's the sum of the parts. Q1, media and experiences did $11.94 billion in revenue, but only $331 million of the adjusted EBITDA. The core profitability on an EBITDA basis is at connectivity. So Comcast is holding the crown jewel assets. So this separates the cash rich pipes of the business to get a cleaner multiple and puts the higher CapEx in a separate company. I mean, you got Peacock in there with 46 million subs, revenue growing 71%. It's still lost $432 million on an EBITDA basis. I mean, this follows the spin out of Versant, which included CNBC, MS Now, USA, Golf Channel, and others. I like it. I like it. How do all you feel about it? I know Comcast, not really something that people look at. It is not technology. It's not exciting. It's legacy media. But hugely profitable. And the stock is down huge. The fact that on a year-to-date basis, this stock was in the 30s, this 25% move is just the tip of the iceberg. Just the tip of the iceberg. I'm not jumping in, but I do want to see how the dividend is impacted. Is it going to get re-rated the way that A&T re-rated the dividend? I'm not sure. Amit is overseas, ladies and gentlemen. Amit is overseas. He will begin streaming again on Monday, 1 week from today. 1 week from today. So let's get into some more news. We have, I guess, start with oil. We'll start with oil. So oil's around 70, and it's been a round trip. I mean, 120 is where we went up to. Brent fell more than 10% in a week. We all know the story. I think, okay, that oil is caught between a tight physical setup and a supply normalization. And I think that we're going to continue to trade in the 65 to 75 range. I'm not going to get ahead of myself on this. If we go and look where oil is at right now, and oil is very important, the reason I continuously talk about oil is because this is the number one driver of inflation. Oil touches transportation. It touches everything. We're hanging out around 70. I happen to think that this is good. This is really good here. Heading into earnings season, we get a week off next week, and then we roll right into finance earnings. If oil can stay under 70 or even drift lower, I'm expecting that we get potentially earnings guidance raises for Q3. I cannot wait to see what the Q2 numbers come in at. Cannot wait. Look, I'm looking at this and I'm not seeing anything bad. Yes, there's companies that still trade at a disrespected level. I think that all right, let's go to the chart on SPY. And give me a little bit of rope here. Yes, we're hovering around all-time highs. 729 on the SPY. We reached about 760. Okay? This is happening without companies like Microsoft. Microsoft's a couple of percent of SPY, a couple of percent. On a year-to-date basis, it's happening without Microsoft. It's happening without Meta. It's happening without Palantir. And I got to tell you, my call on Palantir may end up being true. If I call the bottom on Palantir, that's going to be some shit, ladies and gentlemen. That is going to be some stuff. And Palantir's got some news out today. They just did 2 headlines. They're doing a commercialization push plus the NVIDIA Nematron. I probably pronounced that incorrectly. So Palantir launched an engine to deploy NVIDIA's Nematron open models into sovereign air-gapped environments. It also expanded its Surf Air Mobility partnership to accelerate commercialization of Operator OS, Owner OS, and enterprise products. So here's what this means in plain English. Palantir is baking NVIDIA's Nematron open models and CUDA-X into the ontology layer at the core of its AI platform and into its FDEs, the forward deployed engineers. The goal is autonomous, domain-specific AI agents that can run on sensitive, regulated, or classified data. NVIDIA has named Palantir a key partner for its flagship Nematron 3 Ultra model, a 550 billion parameter system. I believe this matters tremendously because of the sovereign and air-gapped angle. This becomes a differentiator. A lot of people, a lot of companies, a lot of governments. Oh my God. All right, I got to stop talking. I want to hear this. We're going to watch this together, and you're probably going to see a Steve meltdown. I know how you guys love seeing the Steve meltdowns. So give me a sec. Let me back up the tape. Bring it in here. Oh, God.
It's time for an economic reset, a true minimum tax on billionaires that, well, ensures the people at the very top pay at least the tax rate their own workers pay. We also should end this tax-free lifestyle loan. This is the gimmick that allows the ultra-wealthy to borrow against their stock portfolios while reporting no taxable income. We also have to rewrite those inheritance rules so that the largest intergenerational wealth transfer in human history, estimated about, well, be $124 trillion that will be changing hands, doesn't lock in a permanent American aristocracy of inherited wealth.
I'm surprised that he's talking about this in the context of calling it a wealth tax, because my understanding of it, if you read through it, it's a lot of the stuff that we talk about around the loan stuff, around a sort of a minimum tax that may relate to capital gains, but not
like a property tax.
Not taxing unrealized gains. And I think that most people that have been sort of on the other end of a wealth tax have.
Okay. I'm going to try to be brief about this, okay? I'm going to try not to get angry. I understand you guys care about me. You don't want my blood pressure spiking. I truly appreciate that. You guys are the best. You guys are the best. Here's where I'm at. I'm not carrying the water for the billionaire class, okay? I think that there's a common ground. I do believe there's a common ground. I'm not some ultra bullish billionaire rah, rah, rah. What I truly believe is we need to protect the idea of success in this country and not demonize success. The tax code was written by bureaucrats, and business owners play within the defined rules. If there are loopholes that need to be closed, they should be closed. I get very worried about an unrealized capital gain tax. And look, I do not believe that everything in this concept is incorrect. Okay. I do truly believe that there are some things that we can do better. But taxing unrealized capital gains and doing a 5% national tax on billionaires is un-American. It demonizes success because it tells everybody that there is a line at which when you hit it, automatically you get hit. We want everybody to celebrate entrepreneurship. The other thing is, a lot of these people, I'm sure a lot of people in the chat, a lot of our assets are not cash sitting under the mattress or sitting in a high yield savings account. A lot of them are in the stock market, houses, and I know houses they say is not going to be on the table. But could you imagine having to pay unrealized capital gains on assets that you have not actually taken a profit on? How do you raise that capital? Well, you have to sell something. What about businesses? And here's the big part. I don't believe this stops at billionaires, and that's why I get so angry about this. We've never seen a tax stop at the billionaire level or at the intended level of the richest Americans. Over time, it always rolls down to normal people. Always. At some point, my own opinion is this will become a tax on people with 100 million in assets, then 10 million in assets, then 1 million in assets. 1 million in assets has become more and more common. And if you tax people on the $1 in $10 million line, if they own a construction business, because that's part of their net worth, you own a construction business that's $6 million value, that doesn't mean that you have $6 million. That means that your business is worth $6 million. You're employing people. You are doing business with other businesses. You're buying supplies. You're enriching the economy. But you're going to have to go take a loan to pay taxes on something that you haven't taken capital out of? I think that this is a slippery slope. I really do. I would much rather the elected officials look at the tax code, and if there are things that need to be changed, change them in the open. But don't do a unilateral and set the precedent for a 5% tax. I just think it is a very slippery slope. Very slippery slope. We have never seen this stay at that level. And look, for the stock market, which we all care about, that would mean somebody like Elon, somebody like Zuckerberg, somebody like Bezos would likely have to sell shares of their companies. That becomes forced selling into the market. And we all know if there's not enough buyers into the market, that will impact the stock market, which actually impacts everybody. This is not, I'm not making a political statement. This is just economics. This is reality. I try to be very neutral. I am not saying that we should not rewrite the tax code. There are things that annoy me about the tax code. Absolutely there are. But the unilateral tax on success is un-American. And I just don't like it. I don't like it at all. I really don't. Very annoying. And if this happens on a national level, I really would have a hard time believing that a lot of people would not move their businesses somewhere else or reincorporate somewhere else. So, and also think about unrealized capital gains. That means artwork, collectibles, cars, everything. What, are they going to send assessors in and come up with what it theoretically could be worth? It's crazy. Crazies. 100%. What about farmers? Think about, that's a great point, Tesla Granny. What about farmers? Think about how much the farm is actually worth for land, equipment. What, you're going to tax farmers on that? Crazy. Absolutely crazy. I think there's a better way to do it, okay? I think there's a much better way to do it. A lot of people don't like this idea, but I think a flat tax with no exemptions is the way to go. I really do. Everybody pay the same number, no matter what. You call it 20%. If you make 100 grand, you pay 20 grand. You make $100 million, you pay $20 million. No deductions. No deductions. Everybody uses the same fire department. Everybody uses the same police station. Everybody drives on the same roads. If you get an exit on a company and you end up making $1 billion, I mean, 200 million goes to the government for taxes. I just don't think that that's that crazy of an idea. And the numbers actually work. Flat tax is the fairest way to do it. Absolutely fairest. And look, there are things in the tax code that need to be discussed. Borrowing against assets, the awards of warrants. There's a lot of things. And that doesn't mean that there aren't problems in the government. We do need to fix spending. There's no question about that. But at the same time, we also need to make sure that we don't demonize success. And we remember that we fought wars. Like we went to war with Britain over a lot less. Let's not forget that. The Sugar Act, Townsend Act, Stamp Act, all rolled into the American Revolution. Let's not forget our roots. Like, anyway, I could go on and on and on. Listen, it's not about avoiding taxes. If you made money, if you have to pay taxes, that means that you made money. But maybe there's a better way to spend the money, and maybe there's a better way to tax. Just saying. I'm not saying that we should avoid. I mean, look, we do need to pay taxes. As much as I hate paying taxes, we do need to pay them. But it's how the money's spent and how the money's collected that needs to be looked at. So, there you go. There you go. Oh, Gavin Newsom. Oh, Gavin. National tax. That will never stay as a billionaire tax. So Palantir is up to 117. 117. Oh, and by the way, that is very rudimentary what I said. If I actually go through my plan, which I wrote one night and sent it to Amit after drinking years ago, the first 50,000 or 60,000 would be 0%. There's no reason for a family making under 50,000 to pay taxes, in my opinion. There's no reason. So it's more involved than just a flat tax. There would be an exemption level. There's a whole lot of things. But the system is broken. And Palantir, baby, Palantir is up quite a bit right now. We are running to 117. And I'm going to say it. I may have called the bottom. I don't want to get ahead of myself. But I do think Palantir looks very interesting. Is Chris here? Chris is always welcome to come on. I will shoot him a... Hold on. Are you in the chat? I just shot him the message. I put Palantir back to bullish last week, and it's up 3.5% since then. So we'll see. I do think that Palantir is going to start running again. I think that we're going to roll into earnings. I think that they're going to do 90% plus. Oh boy, this may be a party. This could be a party. Love it. Love it. Love it. Feel free, Canada. Feel free. So I think we got to look at media stocks. because this Comcast news could revitalize that trade. It really could. Hopefully it dumps at the open. Hopefully what dumps at the open? Tanner, you're making breakfast. What are you making? Your cold oats? Just saying. Make them the way I make them, Tanner. You'll enjoy them, I promise. I promise. All right, oil just ticked up above 70. Apple's up a little bit. We got AMD. Seriously, Tanner, make them the way that I make them. Make them the way I make them. The way I make them, you will love it.
Have changed dramatically. And we talk about it every day with SpaceX and what Starlink is going to be able to do once the Starship gets up there in terms of the competitive set it will bring to bear. Not to mention fixed wireless, which was thought to have a not particularly long life in terms of the capacity constraints that have not really appeared. And so you watch T-Mobile and Verizon and others introducing that as a real competitor to broadband. And so you have a multiple here on Comcast that is just so low, it's almost hard to imagine. A $200 billion market value has shrunk to about $80 billion. And here we are. But the larger context, of course, will there be further consolidation? In some ways, it's hard to imagine that won't be the case as we watch Paramount continue to focus on closing its deal with Warner Brothers.
I mean, I'll just cite the JPM desk this morning asking a bunch of questions that they argue need to be asked. Netflix, right? Does that fit? Is that a natural?
It's in some ways, I mean, they've made it clear that they consider M&A a part of their strategy now. And it's one reason why, although the stock did come to life a bit towards the end of last week, that the stock has been down so much, I think, given they were in the pole position for quite some time there to acquire Warner Brothers before getting nudged out by Paramount's higher bid. You can't not consider that. I don't know if they want to own a network. I don't know on the regulatory front, given the Trump administration's dislike, I think it's fair to say, or the president's dislike of Brian Roberts.
But the studio,
what could get done. But you can make, it makes sense on certain fronts. My sense is at this point, it may be a little while until you see that actual consolidation occur, but it's hard to imagine it won't.
Are they going to get CNBC back in
the claim, Sarah, is that it makes sense to have gotten rid of the linear cable networks regardless. So that makes us feel great.
But it's true. Everybody's jumping to the M&A, and what ultimately this will mean for two pure plays here, right?
Yes. Yeah. I mean, and again, by the way, they will both be investment grade. Which is important. My sense would be, based on the conversations I've had as well, that there will be a lot more debt on the Comcast side, as you'd imagine. It still generates a lot of cash flow. And so NBC will be relatively unlevered, as was the case with Versant.
We're going to watch that, obviously, leading our show today. Let's talk some broader markets, too. Stocks are poised to open the week higher. 5 straight.
I think this is going to be very exciting. But you know what's even more exciting, ladies and gentlemen? President Donald Trump has said that Iran has requested a meeting. It will take place tomorrow. Very good. Hopefully we're at the end of this. Hopefully we are at the end of this. Don't get Lena started about what Netflix After Hours is. She's come up with her own network. If Iran is requesting a meeting, maybe we actually get through this over the next several weeks and really get everything flushed out. That would be incredible for the oil markets. That it would be even better running into Q2 earnings for the big banks. Olivia, what's going on? Rusty, you buying Netflix? I actually don't hate it. I put it in the stock draft. I do think that entertainment is undervalued. I'm looking at Disney again. I don't really want to own Disney, but the fact that Comcast is spinning out NBC just makes me think that there really is a play on media assets right now. Media assets, I think, are undervalued, and the larger companies may make a play to consolidate and buy them up. And we got Nike earnings tomorrow. Nike earnings, people want this to be a turnaround. This is a hated company that is at $41.20. The dividend yield is now past 4%. Past 4%. That is crazy, ladies and gentlemen. Absolutely crazy. Oh, man. And then we got memory. We got AI. We have a lot of things not working right now and things working. People have rotated. You got Micron over 1,100, yet NVIDIA is under 200, Broadcom's under 400, Microsoft's under 400. What happens? Dougie Dallas. It's 6:16 in the morning where you are, sir. I mean, Robinhood is paying to play right now. They are really paying to play. I don't know how they're not getting more people to move over. Pretty crazy. Yeah, Micron got some serious upgrades. I believe somebody upgraded them to 2,000, if I'm not mistaken. Hold on. I know I saw that somewhere this morning. Somebody upgraded Micron to 2,000, which I think is plausible. I think Micron's very undervalued, and I think the CapEx cycle continues to roll on. I don't think that this is something that lasts 2 or 3 years. I really am starting to believe that this is something that lasts 5 to 10 years, maybe longer. These companies are not building out their facilities for a 1 or 2 year ramp. It's just not plausible. It's just not plausible. And then we had CXMT and Tencent doing a $3 billion DRAM deal. That was the other thing I forgot to mention this morning. So China's top memory maker, which is CXMT, signed a long-term DRAM supply deal with Tencent for $3 billion. And this is expected to cover server memory for 3 to 5 years. Now, CXMT's Star is IPOing around $4.2 billion. And I think it's bullish for the memory trade, especially Micron. Because it validates the shortage, it validates pricing power, validates visibility. And look, I always say it, I have no idea what the future holds. Nor does anybody else. Anybody who says that they know that this is going to happen is full of shit. I don't know what's going to happen. But if we read the tea leaves, which I'm starting to get a little better at, Micron's locking in 5-year deals. Samsung and SK Hynix are spending over $1 trillion over 10 years on CapEx. Taiwan Semi just did a deal to increase wafers with DRAM, and they're spending more on CapEx. Then you have Micron spending more on CapEx. I really don't think that this is CapEx for a year or two. I just don't see how all these companies spend on CapEx just to have this roll off a cliff. I don't see it. I think the market's being short-sighted on how long this can last. And look, I get it. There's a lot of investments that can probably do very well. Look, Micron's one of them. We looked at it last night. Micron could have a lot of room to run. I don't think that we're in a situation where Micron looks expensive. The earnings estimates have more than doubled for 2028. More than doubled. $163. This was at 80 something, or I think 78 actually, a couple weeks ago. Micron's trading at less than 10 times next year and the following year's earnings with a huge amount of EPS growth, okay? if the street is wrong about where this falls off, if we look at Micron's forward earnings, this could be not an everlasting. Like, we can absolutely get a bear market. We could get a retracement. Absolutely. But in theory, Micron does not need to see this number get down to 121 in 2029. And this is only 2 analysts. I believe there's only 2 analysts willing to cover Micron that far out because nobody has a clue what the hell is going to happen. Don't be surprised if this number here goes to 200 at some point. Do not be surprised. Krupa, I could not have said it better. Money doesn't necessarily follow good companies. And that's the tricky part in investing. I'm with you. Now, and this is an if, okay? I have no idea. But if Micron's earnings go up halfway through next year for 2029, I think that will signal there's a lot more demand to come. Look, we have a lot of things happening. We have robotics, we got FSD. Eventually, FSD is going to come nationally. It's not here yet. I mean, eventually it'll come. We have AGI, advancements in AI, super intelligence. Technology never stops. And this could be the cycle that gets memory companies to not be looked at as cyclical companies. And maybe it doesn't happen next week, but it could happen in the next year or two. And if that happens, well, 90% margins just means that there's a lot of margin for somebody else to come in and take away from them. Intel could start making DRAM. Taiwan Semi, I mean, you could start getting companies to spend to make DRAM if they thought it was the best use of their capital. There's only a couple of companies that make it right now. And that's one of the reasons Apple left the Intel atmosphere to get their own chips and make their own chips. Amit is overseas. But the memory play is probably a road to CPUs and GPUs and components and everything else. We know that Microsoft signed a 2-year deal, or we know they signed a 20-year deal with Chevron for more energy, and over the next 2 years, they're talking about doubling their data center footprint. You know, when we put all this, or at least when I put all this together, I do think that we're going to be okay with NVIDIA here. We're going to be okay with AMD, Marvell. I think they go up. I don't think they have to go down. We'll see. There's a lot of interesting things happening. And you know what? NVIDIA is still under 195, which is a little weird. All right, let's take a look. Where we're at. And we got Nike earnings tomorrow, which I will be very excited about. And I'm going to talk to Jason about Technical Tuesday tomorrow. Is Jason here? He is. I know. I got to figure it out for you, buddy. I'll figure it out. Jason, tomorrow, Technical Tuesday. Let me know if you're in. So Rocket Lab 93 and ASTS 7538. Space Mob is rocking and rolling. Palantir is 117. IREN is still under 50. Okay, so we got Jason confirming. Technical Tuesday rides on tomorrow, ladies and gentlemen. Technical Tuesday tomorrow. Be here or be square. Oracle 153. ServiceNow, Senor Patel's got to be happy. 101. I think ServiceNow getting to 90 may have been the biggest gift that we could have gotten. That was just crazy. And SpaceX is hanging out. When does the first tranche of SpaceX unlock? I should not have said it. Now you guys are keep saying going to say Square. Oh boy. I believe. Let me find out. When does the first tranche of SpaceX shares unlock? Around Q2 earnings release window, mid-August, 20% of eligible employee and early backer shares become available for sale. That's a lot of shares that are going to come on the market. If SpaceX can't get past 200 by then, and it stays at this level, I got a bad feeling about it. Yeah, Rusty, I know the lockout period ends this week. I was thinking about employees, but yes, you are correct. All right, 4 minutes until the market open, ladies and gentlemen. 4 minutes. We will get aggressive with the bell in honor of Amit. We will get aggressive. Microsoft is trying to get back to 380. Qualcomm, 193. I like Qualcomm. I said it. I like Qualcomm. Look at Zeta, 1925. And all you thought I was crazy taking Zeta in the stock draft. Before the market opens, let's take a look. Let's take a look at where we are. Matt's in the lead. Canada is in second. I'm actually not sure if this updates real time or not during the no, it doesn't. It'll update at 9:30. We'll come back to it. It does not update after hours. All right, oil ticking up. That's okay. As long as it doesn't go past 75, that's okay. Hood is past 100, ladies and gentlemen. And SoFi is past 18. We will take that on the FinTech trade. We will absolutely take that. Alphabet 341, Reddit 169, we'll take it. ARM 338, QXO under 18. T minus 2 minutes, ladies and gentlemen. T minus 2 minutes. Hopefully everybody's drinking their coffee. Exquisitely good. Starbucks really should, hook me up. I'm a shareholder. I drink Starbucks coffee on stream. At least let me get a coffee a day for free. Hook me up, Starbucks. No, I'm just kidding. I don't mind. I'm a shareholder. I'd rather pay my way. Help the earnings. I don't have enough time before the bell because we are now T minus 60 seconds. I'm going to get into Zeta in a few minutes because I think that a lot of people are probably missing a big opportunity in Zeta. We got NVIDIA under 194. Do I buy back the last of my calls? Is the question. Do I buy back the last of my calls? I want to see if it goes under 190. I mean, if it goes under 190, I think Tanner's going to have a heart attack. And we should get Matt's opinion on the Rocket Lab deal with Iridium. I don't know anything about it, to be honest with you. We know that the Form 8K was established. I mean, the agreement for the plan of merger, I don't know shit about these companies, so I just don't want to go through it. We're open, ladies and gentlemen. We're open. Ding, ding, ding. All right, we're off to the races, ladies and gentlemen. We are off to the races. Rocket Lab shooting up. It is holding the 9% pump on the merger. It is holding it. You got ASTS, Space Mob, still running up over 6%. You got Oracle, 3.5%, ladies and gentlemen. 3.5%. the market is open. Nebius is rounding the corner. Nebius, 248. It's trying to get back to 250, ladies and gentlemen. SpaceX, gapping up with just a tick. It was at 156 before. It's at 158 now. 158. Can it get above 160 today? We're sure as hell going to find out. And then Palantir. Two big deals. I think the bigger deal of the two was with NVIDIA, and I think that it's going to be glorious for them. I do think Palantir looks very interesting going forward, and I think Palantir may actually be of a valuation at this point. Dare I say that it makes sense going forward? Dare I say it makes sense? I did re-rate it to bullish from neutral, so I do think it makes sense going forward if you have a couple of year time frame. Zeta Global, where'd you go? 1945. 6 years before the Mick became a Yankee. The Mick inaugural season, Mickey Mantle, 1951. Bowman, iconic card. Anyway, ServiceNow, up 3%, 101. I'm telling you, SAS is not dead. I am telling you, I do not believe SAS is dead. Meta and Google. So Meta's up 2.5%. Same with Google, 564 and 345. We'll take it. Broadcom, where are you? It keeps moving on me quickly. I can't catch it. Where is it? Amazon 236. Where the hell did Broadcom just go? 373. Broadcom up 2.5%. Microsoft is running a little bit, 379. Qualcomm. We will look at the numbers for everybody. A lot of people are asking me about Qualcomm. We will run through the numbers. We will run through them. Cisco up $1.50. Hoodie-O Hood. Hoodie-O Hood just lost 100. I can't even click it. It's moving so quickly, ladies and gentlemen. Reddit 168. NVIDIA 193. Salesforce trying to get back to 160. Uberlicious trying to get to 77. Do not fade Pelosi. Look at this. 76.67, ladies and gentlemen. Do not fade Nancy. Nancy is the greatest stock trader of all time. She should open a hedge fund. Imagine if Pelosi opened a hedge fund. Imagine. I'd invest. I would absolutely invest. And Micron is only down $18. I don't hate that. Wendigales is down. People are not believing this. Wendigales is done. Or down. Not done, down. I should go get a spicy chicken today. SanDisk is holding out over 2,000. Nokia is down a little bit. Lulu is down a little bit, ladies and gentlemen. All right, let's go to the stock draft. Let's see what's going on. Let's bring it up. See how everybody's doing. Now that it is Maddie is in the green. 0.34%. Tanner's number 2. Jason, number 3. Christopher Patel, number 4. Myself is number 5. And Amit is the biggest loser after week 1. I got to tell you, the basis points crew stinking it up right now. Uber, 7% in the portfolio. Salesforce, 4.2%. Zeta, 0.32%. Then the rest are losers. CoreWeave is down 18% for me. Oracle, 16%. I'll make it a little bigger for everybody. I mean, that's just stinking it up. Everybody got hit, though. Let's look at Maddie's portfolio. What does Maddie have? SpaceX short is doing very well for him. Nubank, Nexstar Energy, SoFi, Micron. Maybe I can get SoFi from him for something. Maybe I'll try sneak a little trade there. Maybe. Tanner. Man, I don't hate this at all. I think Tanner's portfolio is going to come back. I really do. Yes, I have to figure out Jason's. I will make it a point to figure out Jason's today or tomorrow and get this update and give him those shares of the spin out company. I will definitely look to do that. And I got to figure out how to calculate it. Chris, Vive Systems, look at that. Chris has got the two over 10% already. I don't hate this. I do not hate this. Stock draft in full effect, ladies and gentlemen. All right, let's get into some numbers. Let's look at a few things. And if there's anything you guys want me to look at, feel free to make it a request. I mean, yes, Hana, huge, Jason, huge. Jason's like, ooh, I got stuff to do. Hold on a sec. All right, let's get into looking at a few things. I do believe, in all seriousness, okay, Zeta is one of the companies I really do believe in a lot. Now, I'm going to run a poll. I want to see how many of you are in Zeta. We're going to look at Zeta. We're going to look at Qualcomm. I know you guys really like the chips. We're going to look at the chips again. We're going to try to find some value. We're going to try to find some things to invest in. I still have some cash I need to deploy that I have not deployed yet. I did buy Uber. I did buy something I don't even remember. I went shopping last week during the downturn, but I still got a little bit of cash to deploy. Maybe we'll deploy some today. But let me get in. Let me run a poll real quick. Start a poll. Ask a question. We're going to phrase it like this. Are you invested in or interested in Zeta? Question mark. All right, let's see what everybody says. We got a lot of people here. Please vote. And if you could do me a favor, everybody, if you could like and subscribe, it really helps me out a lot. I would really appreciate it. Thank you very much. All right. Wow. We got over 60%. Yes. Okay. Very cool. Very, very, very cool. Nick and I did a video on Zeta. I think it is this guy does so much great due diligence. I cannot say enough good things about Nick. I am going to go through a few things real quick about Zeta. So hold on a sec. All right. We're going to run through Zeta real quick, and then we'll run into chips. And I'm going to explain why I think Zeta has the potential. And I'm going to say it, okay? Don't clip it. We're going to put the big disclaimer out, okay? I have no clue what I'm talking about. But I've seen this story before, and I think Zeta has the potential to be a multi-bagger. I really do. I really, really, really do. Why can't I bring up the presentation? It's so annoying. Why are you not coming up? All right, let me try to do it on Seeking Alpha. I don't want to just run through the numbers. I want to show everybody two very specific things that were in the presentation. All right, Zeta. There a reason why this freaking web browser doesn't want to bring this up? I guess I'm going to be forced to go to Google Chrome, right? All right, you guys are going to get your wish. Believe it or not, you guys are going to get your wish. I'm going to switch to Google Chrome, I think. Okay. So they already have a Rule of 67. They got 50% revenue growth in last quarter. Adjusted EBITDA growth, 42%. Here's the big thing. 6 consecutive quarters of sequential superscale customers. Okay. They have, was it 19, I think? Give me one sec. 19th straight quarter of beat and raise. That's huge. Okay, huge. They are adjusted EBITDA positive. They are expected to be GAAP net income positive this year. This company is under a $5 billion market cap. They serve 51% of the Fortune 100 companies. That is absolutely huge. And this is before the Palantir deal, ladies and gentlemen. The 2028 revenue target was $2.3 billion. I think this is now light. Adjusted EBITDA target of $573 million and free cash flow of $371. This year, they were expected to do $235. I think that they are going to exceed that. Now, the big thing, nobody really understands what this company does. Is it like Trade Desk? Is it not? They do everything on one system. Now, let me find the exact slide. Give me one sec. So here we go. So Zeta consolidates the marketing landscape, which has been fragmented. So engagement, market automation, and data management. It was named a leader on the Forrester Wave chart. Now, here is where, and Nick had a really good flow chart about the Palantir deal. But if we look at the numbers, here's why I think Zeta can become a multi-bagger. $5 billion company, okay? $5 billion company. And their gross margin is already 62%. Now, small company, they are growing. 86 million of EBITDA, 893 million gross profit. Operating income, 8 million. This is on a trailing 12 basis. Net income, negative 23 million. They're expected to be net income positive this year. Here's the big thing. $200 million of free cash flow right now. So you are paying 25 times free cash flow. That is cheap for a growth company that just did 50% revenue growth quarter over quarter. And with the deal from Palantir, they believe, this is for a young growth company. This is really good. This reminds me of a baby Palantir. 50% year over year growth. And they have signed several deals this quarter that are expected to be huge. We're going to find out on the Q2 earnings call. I think that Zeta is an undervalued growth company that people are sleeping on. $5 billion market cap. Nobody's going to be thinking that this is overvalued at $15 billion. In today's day and age, $15 billion is not even a large market cap. And if they keep growing like this, I won't be surprised, okay? Especially when you have a 94% margin for free cash flow in Q1. The Palantir deal is expected to do about $100 million of revenue per year for them. So Zeta is an advertising business, and they believe that they will be able to give a 10x return for every dollar spent. Right now, they say that they do a 6 to 7x return for every dollar that the marketing department spend with them. How do I know AI won't disrupt their business? They utilize AI. Their business is built around AI. They just introduced their Athena product, which was built with OpenAI, and the partnership with Palantir embeds Palantir's ontology into the Zeta cloud. Zeta is AI. That's the big thing. Zeta is the disruptor in the fragmented business. I think that they're going to eat Trade Desk lunch. I think they're going to do a lot of interesting things. Yeah, and that's the big thing. If you go back and you listen to the Basis Points episode when we had David Steinberg, their CEO, on, he did a great job of explaining, unlike these other companies, they own all the data on the back end. So we'll see. We will see what happens. But this is I normally don't do this. Okay. All right, hold on. I want to hear what they're saying. Let's cut over real quick. They are going to talk about Nike. Let's see if there's anything interesting about this.
From 47 from 52. Look, the turnaround has been happening. There are signs that it's working under CEO Elliott Hill, who's now been there almost 2 full years. But it's slow, and the price, Nike's stock has gotten hit. Investors are impatient. They just announced, of course, end of last week, we broke the story that he's bringing in a new CFO, someone from Pfizer, Dave Denton, well-known public company CFO. So to help set them up for their next phase. I think the question, Mike, tomorrow is what does guidance look like? Will they reset now that they have a new CFO coming in? He won't start just yet. The current CEO, Matt Friend, will be on the call tomorrow, but just what does the time frame look like? There's progress with things like North America back to growth and wholesale and running and some of the new innovations, but it's a big ship to turn around, and they haven't done it yet.
Yeah, the street is definitely asking what represents sort of rock bottom setting of the bar at this point, and what would be kitchen sinking it, or what represents upside surprise relative to the pace of the turnaround. We talk about it, and the stock is back to where it was a dozen years ago, and so are earnings estimates. So it's really this huge rebasing of the fundamental story that has to start to take hold pretty soon.
There's some things that should help. For instance, tariff refunds. This is a company that paid a lot in tariffs, and the World Cup, they have some momentum with this. Their ad, I don't know,
that's the weird thing, is that the World Cup has done nothing to accelerate mindshare that we can see. It got to 40 on Friday.
Right.
Two downgrades last week, out of Key and the one other, Evercore, went to Inline.
Yes, I remember.
But they said minimal innovation, and you talked to them about their innovation pipeline in recent quarters.
Yeah, it's just it's slower to sort of capture the imagination right now, and they've got tough competition when it comes to Adidas, for instance, and then on the apparel space, these companies like Alo, who've just Viore, even though Lululemon is struggling, for instance, it's a competitive marketplace, and they do have better relationships though with the Foot Lockers and the Dicks of the world since Elliott Hill has come back, and they've got some cool products in running, but they don't have that key. We're not seeing the lines outside the stores on the releases for some of the new Jordans we used to see, where it's a halo effect for the entire brand. That's something that Elliott's working on.
By the ad, you mean Josh Safdie's ad after the next championship? Or you meant the World Cup?
No, I meant the World Cup ad that my kids watch on repeat. I've seen 1,000 times.
Why aren't they watching the Josh Safdie ad?
Jumps over a kid at the end, and it's this incredible, 10-minute commercial.
I guess that's fun too.
I just watched Game 4 and over and over again.
Repeat.
And Game 5. I just watched them over and over again.
It plays as wallpaper.
Yes, anytime I have an opportunity, I just watch them.
Thanks, Mike. We'll see you in a little bit. As we go to break, watch bonds. As Sarah mentioned, Warsh in Portugal with Sarah later midweek will be important. But the jobs number 2, estimate 113K. We'll get conference board tomorrow. Yields are up a little bit here. 10-year back to 4.37. Stay with us.
All right. And look, Nike could reset the dividend. That is obviously something that could happen when they get a new CFO. Absolutely could happen. We'll see. We'll see. Maybe. All right. So Zeta, I think that this is something over the next year or two is going to do very well. We will see what happens. Let's get into chips. A lot of you asked me about Qualcomm a lot. Let's look at Qualcomm real quick. Since this is up, let's look at the last quarter. This is the first problem, negative revenue growth. This is a very profitable company that is really not growing. That's always been the knock on Qualcomm. So let's look at this on a trailing 12 first, 5% year over year. All right, so let's look at Qualcomm versus Broadcom. NVIDIA is a little unfair due to how big they are. Revenue $44.5 billion compared to Broadcom 75. Let's look at margins, the great margins, even though they're not as good as Broadcom's, they are very efficient at deploying capital, which I love. So that's a big thing. Margins for Broadcom are so much better. You're paying up for Broadcom because of its forward growth and its margins. Qualcomm still looks very attractive if you're looking at this from a value perspective. 16 times free cash flow. We know they're buying back a lot of shares. The problem is the growth. Now, let's see what the analyst community thinks on a forward basis for them. Qualcomm, Broadcom, NVIDIA, AMD. I mean, once again, it's very hard. Yeah, it's trading at a very low multiple, but just because it trades at a low multiple doesn't mean it's a great deal. It's hard not to. And look, it's trading at 17 times this year's earnings, cheapest in the bunch. But if you're only growing your EPS 22% over the next 2 years, while Broadcom is growing at 125%, I would probably rather be in Broadcom than Qualcomm. Now, I'm not saying Qualcomm can't do good, but the street is pricing it the way it is because it's in a sector where everybody is catching huge growth except for them. Even Intel is catching huge growth. Triple-digit growth. Now, Intel is much more expensive, but I don't know. I need to look more into Qualcomm's CPU chips for servers for 2028. It may be a great value play for 3 to 5 years if they can accelerate growth because of that. But I don't know. I'm not a technical person to that degree, not an electronics person. I would say for the short term, Broadcom, but Qualcomm is certainly interesting for a long-term play. It's got the profitability. The question is, can they get back to growth, and are they going to be able to deploy capital in a way to get back to growth? Wow, CrowdStrike, ladies and gentlemen. Look at this. CrowdStrike is a running. It's up $49 right now. Meta up 19, Nebius up 15, Costco, my favorite company, up 14, Tesla up 12, Take-Two, running down the dream right now, riding that GTA 6 high. I got to throw TKO Group on here. Why is it not on here? What's TKO doing? Down a little bit. I still can't believe this ran to 215. Man, anybody who thought I was being intelligent when talking about it here and caught that, congratulations. I didn't. What's Hood doing? Is Hood doing Hood things? It is. It's over 100, ladies and gentlemen. Hood is over 100. You got to like that. You got to like it. You know, it is what it is. You can't catch everything. You cannot catch everything. Then you got CoreWeave. And it's just 93.80. Look, CoreWeave has a lot of debt. And look, people are questioning the build out. People are questioning CapEx. I hate to say it, but I think we got to get through the next quarter's earnings. And I think we got to see what all the hyperscalers say. I think they got to come out and say, listen, we're not going anywhere. We're spending. We are going to spend. Yeah, what's Wendy's doing right now? This Wall Street Bets crazy idea that I'm starting to think looks good. It just flipped green. Wendy's just flipped green. And then you got Uber. Iren is Iren, and it's garbage. I mean, it's the one I don't own. I own Nebius and CoreWeave. I do not own Iren. And then you got Siri hanging in there at $29. Siri hanging in there at $29. Reddit, oh my God. We got to get a chart. Reddit just exploded up. Now I'm in danger again. My shares called away. Reddit just took a major leg up. What the hell's the... Why is Reddit doing this? Is there any news? Hold on. No news. It just went higher. Now it's starting to sell off. I do like Reddit. I won't be angry if my shares get called away. I have options at 172.50 for this week. Look, do I think Reddit can go past 200? Yes. It's not something that I'm looking to stay in, although in my head, I've been saying to myself, you know what? This is actually a great stock to maybe put more money into and just write calls at because of how big the premiums are. Angry girl, what are you saying? Oh my God, what happened? I don't know if I want to roll. We'll see what happens on Thursday. Maybe I roll, maybe I don't. There are things I want to use the capital for. There are things that I want to use the capital for, but I don't know. I wouldn't be opposed to rolling. Let's see what happens. This thing is up and down all the time. It's been great for volatility and writing calls. It's been absolutely great. What's Amazon doing? Amazon ripping right now, up 3.7%. I'm not seeing anything on the news about Microsoft. I'm sorry, about Amazon. Let's see. Got some interesting Google news right now. Google Ventures led a 30 million seed round into Nebix, a space fintech startup. Crazy. It wants to connect U.S. space companies selling technology. I don't even know what to say about that. I'm happy that Amazon's over 240. Amazon is undervalued, in my opinion. Is AMD getting smacked around? Lena's favorite company. Down, I mean, I don't think we can say this is getting smacked around. But yes, it's down a little bit, but it looks like it's consolidating right here. All right, let's look at chart of CoreWeave. Oof. Oof. Nasty chart. Nasty chart. If this breaks 90, I'm gonna buy more, I think. Nasty chart. Where's Palantir at right now? All right, Palantir's holding 117, ladies and gentlemen. We may have caught a bottom on Palantir. We may have caught a bottom. I don't hate this. I do not hate this on Palantir. And look, rolling into earnings. If Palantir comes out and does 90, 95% year over year, I wouldn't be surprised if this gets back to 140. And we know that the news with NVIDIA is going to be big for them. Where's NVIDIA at? NVIDIA can't catch a break. NVIDIA just, since May, has not been able to catch a break. This is crazy. Absolutely crazy. Look, I do believe that NVIDIA will be higher in the future. I don't know what it's going to take. And the thing that scares me with NVIDIA, and I've said this to Tanner, is that it can't break out on the best quarters in the market. I mean, it just, everybody's worried. Now we're starting to get, it looks like it's trying to consolidate, but I don't know, man. It's crazy. How about Meta? Did Meta find a short-term low? Maybe. I mean, last time it did this, it really ran. I don't know. I'm not going to expect Meta to get past 600 until earnings. I think we got to see earnings. I think we got to see earnings for Meta. Crude is at 70. That is fine. NVIDIA is doing 50% of their free cash flow back to investors, which is good. We just got the big dividend, 25 cents a share. In my opinion, that is great. Let's look at Micron. What's happening with Micron right now? Micron making a move to the downsides, down 70. It is down 70. I wonder if people are wondering if the fact that Taiwan Semi is going to boost the wafer production and Samsung and SK spending over $1 trillion over the next 10 years on CapEx, I wonder if people are starting to price this in as eroding pricing power. Could be. It could be. That's a big candle. That's a huge drawdown. And look, the other thing about Micron, people really may be saying, you know what? This is always going to be looked at as a cyclical business. That could also happen. I don't know. Because it is. Well, listen, a lot of people think it is. There's no question about that. A lot of people think that it is a cyclical business. It's always been viewed as that. I'd like to see a green wick on that candle, to be brutally honest with everybody. I would really like to see a green wick with that candle. I don't know if we're going to see it, though. I do not know if we're going to see it. And it's still going. Oh, my God. It's under 1,050. It is still going lower. Whew. Whew, whew, whew. I don't even know, ladies and gentlemen. You tried to get a green tick. It didn't go. It didn't go. Oh, no. This is probably the news from the weekend that came in. This is probably the news from Taiwan Semi that came in. And if it holds this level, then I don't know. We'll see. This candle's getting deeper, though. We'll come back to Micron in a minute. Let's look at everything else. AMD 507, Amazon 242, Broadcom flip red. Now it's back to green. ASTS 7758. Rocket Lab's losing a little bit. It's trying to hold 90. And Amazon is up over 4%. Whoa, Zeta trying to make a run on 20. Trying to make a run on 20. And Palantir is trying to make a run on 120. So far, it's a good day. So far, it's a good day for a lot of people. And ServiceNow keeps going up. I mean, what are the chances that we are here in a year and a half from now saying, man, this SaaS apocalypse narrative was the dumbest thing that happened to the market in the past several years? What are the chances of that? I think that that's completely plausible. Completely plausible. Tesla is trying to get back to 400 for Jake Rizzo. It's trying. Where's my Microsoft over 375? We'll take that. We will certainly take that. All right, yeah. Where's Nebius? Let's look at the other Neo clouds. I mean, can't really be mad at that. Big candle down, but you can't be mad at that. Nebius is up so much in the past couple of months. And there it is. NVIDIA just turned red. NVIDIA just turned red. Elon should buy out or merge SpaceX with ASTS. I think Elon's going to focus on Tesla first and then maybe buy T-Mobile or something like that. Hood just fell under 100. CoreWeave. Whoa, let's look at down the big one. Whoa. Whoa. That's good. Looks like it's going to break 90. Now, I know the debt level sucks, but their expected forward revenue and their RPO is so big, this may make sense. This may make sense. I wouldn't mind adding more under 90. Let's see if we get another candle down and how far this goes. It's only 10:11. The markets haven't even been open an hour. Let's see how much further this can go down before we add more. Same thing with NVIDIA. NVIDIA is selling off hard. The market is worried about hardware. Iceberg ahead. I mean, that's what this pricing looks like. This pricing looks like they believe there's an iceberg ahead. I mean, where's SMH today? SMH is getting mollywopped right now. It's Amit's fault. I'll buy that. I will certainly buy that this is Amit's fault. I will absolutely buy that. I mean, this is still going. SMH is still going. We can't even get some buyers to step in. We cannot even get some buyers to step in. Whew. Oh my God. This is ugly. Where did NVIDIA go? Did this break down under 190? Nope. But you know what? It's not getting any better right now. All right, how about Micron? 1036 is well under 1050. Does this break 1,000? AMD about to go under 500. Let's check. AMD about to go under 500. Yeah, a lot of this could be rebalancing end of the month. I don't think one day really matters. We're going to go into earnings, and a lot of people are probably going to be surprised at what these companies report. $501. Oh, 500. It just fell. It just broke 5. Question is, does it come back or does it just keep dropping? It just crossed over. It looks like that was a psychological level people are trying to buy. 498. Is gravity going to take hold is the question. And if AMD just did that and it's now fighting between 498 and 499, what did NVIDIA just do? 190. It's not just one name. NVIDIA is about to lose 190 also. All right. So there are some lawsuits, DRAM price fixing allegations, Samsung, SK Hynix, Micron sued in the U.S., class action lawsuit filed last week in California federal court alleges that Samsung, SK Hynix, and Micron coordinated to restrict DRAM supply and push prices higher during the AI boom. I mean, who knows? According to Jeffries, memory prices could rise another 40 to 50% next quarter and 30 to 40% the following quarter. And normalization is unlikely before 2028. The memory costs are already filtering into consumer electronics, et cetera, et cetera, et cetera. I don't know if that's causing it. That could have something to do with it. Man, this is brutal. This is brutal to watch. Where's Broadcom? 361. I mean, look at this. Ever since earnings, Broadcom has been absolutely brutal. Brutal. And their earnings were incredible. Look, I think we're getting a great deal on Broadcom. I think NVIDIA is a great deal, but you know what? The market is doing what the market does. 497, it is not turning. 497. Huh. Yet the forward numbers on profitability are pretty good. All right, let's look at the Mag 7 or the Lag 7. We got Amazon, which is still up close to 5%, trying to rebound. We got Microsoft trying to, I mean, are all of these up? Meta up 3%. Alphabet up 3%. Maybe we're getting a little rotation. Not that I'd rather see a rotation in a different way, not like this. I wouldn't be surprised if we get a bounce. NVIDIA, it looks like it broke. Yeah, it broke 190 for a couple of seconds, and it's still fighting it. We may get a rotation from the Max SMH. We absolutely may. Jesus, thank you so much for becoming a member. And Albert, thank you so much for gifting 5 memberships. Really appreciate it. Thank you for the support. All right, NVIDIA is trying to run back. Let's see if AMD got past 500 again. All right, NVIDIA is coming back off that candle down to 496. Amazon is back. I mean, how about that? Let's look at Comcast real quick. Where's this going? We have big news today. All right, so Comcast ripped out of the gate, and now it's falling. I guess the market is saying they're not really liking this that much. We'll see. We will see. This is a deal that I got to look more into later. At 25, this may make sense. I am interested to see if the dividend gets re-rated. I do think that NBC on its own company could get acquired. Where's Netflix at? All right, so Netflix is up 2.5% today. Not Uber. Uber's still up 1%. Yeah, did Oracle hold 150? I'm not sure. Oracle did not hold 150. Oracle is dropping like a ton of bricks. Like I threw a brick into the ocean. It is dropping. How about the Qs? All right, so the Qs are still up, but we're getting a big rip down on the Qs. All right, listen, Amazon up over 5%. I can't ask for more than that. At least something that should be going up is working. Hood is over 100 again. I know a lot of people like Hood. I think it's a very good company. I think it's a very well-run company. I just think that and they just lost 100. I think there's more upside in SoFi, in my opinion, from here. And if I bring it up, which I'm going to, right now, we are paying 30 times this year's earnings for SoFi and 53 times for Robinhood, 32 times for Robinhood on 2028, 17 times for SoFi going forward. SoFi's got more EPS growth. I do believe SoFi has more upside than Robinhood right now. I really do. Look, everybody's got an opinion about if they like the products from these companies or not. The numbers are the numbers, and these are the numbers out of the street. These are the analysts. I think both are great companies. I think Hood is going to do very well with prediction markets and crypto and trading. I think it's going to do very well. I also think SoFi is going to do well, and I think SoFi has more catalysts this year, from rate cuts to S&P 500 inclusion to guidance being raised. Their loan book is incredible. Their SoFi USD could be big business. Their big business banking. I think that SoFi's got a lot of catalysts that they can pull this year. And I would not be surprised. I mean, I did buy more SoFi about a month and a half ago. I did buy I bought spreads about a month ago. So I've been pretty active. And listen, I think Noto is top notch. I really do. I think Vlad's a great CEO and founder. I think Noto is building a more diversified company. And I do think SoFi can become a top 10 bank in the world. So we'll see. I agree with you. If Noto left SoFi, I would not be happy, and I would probably exit. If Noto left SoFi, I would probably exit. There's no question about that. No question about that. When I bring them up on the profitability, though, SoFi is, Hood is 4 times larger than SoFi. SoFi trades at a better trailing, better forward PE, PEG ratio is better, EV to EBITDA is roughly 50%, trades at way cheaper price to sales and way cheaper book. SoFi is basically a value company compared to Hood. Hood's got better margins. SoFi is still aggressively growing. They're better at deploying capital right now. No question about it. But if I look at what I'm paying for, paying 25.5 times EBITDA versus 40 times, 35 times operating income compared to 42 times, I just think that SoFi is better for an upswing. And it could be looked at as a catch-up trade. So we'll see. That's my own opinion on it. That's my own opinion on SoFi. So we'll see. And I don't think there's anything wrong with owning both. Okay, so we're getting some news out of the Fed, or we're getting some news out of the Supreme Court on the Fed. I want to hear this. Let's see what they say. Bring it up right now.
Difficulty as a result of still what seems to be the president's animus for Brian Roberts, which Brian Roberts still does own 30, control, I should say 33% of the vote at Versant, hence an owner of MS Now. So unclear, but certainly the worry about regulatory figured into their inability to get a deal done for Warner Brothers. It wasn't paramount. I should say it wasn't the first problem they had. In fact, it was more about structure. And if they had had this existing structure, one might have imagined they might have been at least in a better position to mount a significant bid there.
By the way, we're showing images of Lisa Cook because it does appear that the Supreme Court has weighed in on President Trump's ability to fire Lisa Cook and is siding with her, allowing her to remain at the Federal Reserve for now. Of course, not letting President Trump remove Fed Governor Lisa Cook. That was the issue, whether he had cause and was legally able to do that. Of course, she fought that heavily. We'll go through this. Of course, we want to be very thorough and go through it for you, but it appears for now we did get that headline. We've been waiting for it. It came up at the end of all of this, and will be very interesting to see whether Fed Chairman Warsh has any comment on this. Of course,
the court does seem to have rejected the government's broad definition of cause. Holding the cause must have, and I'm reading here, a substantial threshold, especially given the Federal Reserve's historical independence and the importance of insulating monetary policy from political interference. This cause going to the fact that does the president have the right to do this or not, Sarah?
Right. And of course, Cook's team argued that if the court gives the president that power, that threatens the very independence of the institution. It looks like Chief Justice Roberts wrote the opinion of the court, joined by Sotomayor, Kagan, Kavanaugh, and Jackson. So even some of Trump's appointees there, Kavanaugh, for instance, taking the other side, right?
And they also talk, as often is the case, about procedural grounds as well, saying Cook was entitled by statute to notice and some opportunity to respond before being removed. The court saying she did not need a full trial or an oral hearing, but she did need at least an explanation of the evidence and an avenue to respond, which they claim she did not get, given it was just a social media post from the president that informed her.
Right. And the emphasis there is that it was not deciding whether she can ultimately be removed for cause. The question depends on facts that have not yet been found or evaluated under proper legal standards. In other words, there would have to be more evidence, right? More of a burden of proof here, because the president, of course, accused her of mortgage fraud and said that he has grounds to fire her. I think we have Eamon Javers from Washington who's been going through this opinion and this decision. Eamon, what can you tell us?
Yeah, Sarah, first of all, we can say that the vote here is 5-4. So that's a break from the Supreme Court's recent run of 6-3 decisions. So that's an interesting one. We'll have to look at the makeup of that 5-4 decision. And one of the things that I'm looking at in this decision on page 17 of the ruling is this issue of whether or not the Supreme Court was going to decide whether this was for cause or whether this was going to be about Lisa Cook and whether she was allowed enough formal notice and process in this.
All right, so she's staying on for now. See what happens. I think it's a nothing burger at the end of the day. I think it's an absolute nothing burger. All right. See if we can mount a... all right, we are mounting a comeback. AMD is back over 500. We're at 506. Where's NVIDIA at? NVIDIA 192.79. All right, we're getting a little bit of a comeback here. What about CoreWeave? 91.63. Okay. Starting to get bid up a little bit. How about Micron? 1,056. Starting to come back off that candle. All right, so let's run a poll. Do we think the memory And AI chip trade is exhausted. All right. Please vote if you could. Let's see what everybody thinks. I don't think it is, but you know what? We'll see. All right. A lot more no's than yeses. A lot more no's than yeses. I tend to agree with you. I absolutely tend to agree with you. I'm biased because I got a bunch of money in there. 403 votes. All right. We're going to roll with it. We're going to roll with it. Let's take a look. Let's see. I do believe that even though we got some big wicks, people being, as Matt would call them, shook babies, I don't think that this is over by a country mile. And I'm not a trader. Day to day, these things can happen. Day to day, nobody knows, and momentum happens. Long term, these companies are going to generate so much more profitability. I mean, NVIDIA, 190. I mean, look at how much that just came back. You know the crazy part? When you put this into relevance of market cap, that's a lot of market cap that was just lost and regained. People are looking at numbers on a screen. You think about market cap, that's a ton of market cap. 193, nice. Oh, 190 to 193 in a matter of like 5 minutes. That's a little nice trade for people. I got to look more into the spinoff on Comcast. I promise I will. All right, so AMD 510. AMD just did a $20 move in 5 minutes. How about my Reddit? Whoa, Reddit. Whoa. Whoa. How many of you are in Reddit? I know Amit likes it. I like it. Are you in or interested in Reddit? Start the poll. All right, while we got the poll going on, I want to read this. Hedge funds sold the most technology equities last week, according to Goldman Sachs. The selling exceeded August 2024 when the NASDAQ fell more than 10%. Hedge funds also sold the most U.S. equities since April 2025. Magnificent Seven exposure fell to 14.5%. Lowest levels in 3 years. Huh. Interesting. Not that many people interested in Reddit. Okay. Another poll. This is more for me. Are you a buyer of the Mag 7 still? Look, we got a lot of people in here. We got 4,000 people in here. To me, this is very important because it shows us, look, we have a large community and We're all investors. That's why you guys are watching me. That's why you watch Amit. That's why you watch these shows on YouTube and this commentary. So taking a beat of what we are all doing is very important to me because it shows me where we're at. So if you could please vote on this, would really help. I want to see where the group stands on this. And Amazon's running down a dream, ladies and gentlemen. Amazon is running down a dream. Can we get back to 250 this week? I think we can. I think we can. All right, so 75% of us are still buyers of the Mag 7. 75% of us. We have over 500 votes. I like it. We're going to put another minute on this, and we're going to get into some price targets, and we're going to do some arithmetic. $565 votes, 244 on the share price. Come on, Microsoft. Where's good old Mr. Softy? 375. It's coming back a little bit. NVIDIA. You know, it's funny when we did the New Year's Eve stream and we did the NCAA tournament, or not on the, during the NCAA, we did the NCAA tournament for stocks, and NVIDIA won in both the one with admitted Matt and myself, and then also with the community. And it's not doing anything this year on a year-to-date basis. It is starting to come back today, though. That green candle has taken over the red candle that formed. Now, how much more that goes up, I have no idea. All right, we're going to close this out. 74% yes. 74% yes. All right, let me bring this up. Let me get this going. Let's get this going, ladies and gentlemen. I'm still finding a lot of value, and I think that S&P 8,000 can happen. Let's do the other one. NVIDIA, Microsoft, Amazon, Google, Apple, Meta. Take Tesla out of it. This is not an expensive market. Imagine if Amazon, Microsoft, Meta, and NVIDIA all trade over 20 times forward. This is not an expensive market at all, even at this year's. Let's throw in Coca-Cola. I mean, Coca-Cola trades at 25 times this year's earnings. I don't understand why these companies trade under Coca-Cola. I just don't. Look, Jake Rizzo, you know I had to exclude Tesla there, buddy. You knew I had to exclude Tesla there. Not being a Tesla hater, but I don't think that Tesla should be in the Mag 7 anymore. My own opinion. I think the markets can really do well going forward. Google over Goog because of voting rights. Because of voting rights. we may have to go shopping. Let's look at CoreWeave. I mean, this is let me bring up Seeking Alpha because CoreWeave is I want to look at the revenue. Huge EPS in 2028 and 2029 on a growth standpoint. And you actually have 4 analysts that are willing to put a staple on 2030. And if we look at the revenue growth, this is gigantic revenue growth. I don't hate CoreWeave here. I do not hate CoreWeave here at all. I think that CoreWeave is very interesting. I mean, do we think it's going under? No. Does it have a lot of debt? Yes. But the contracted RPO is so large for them. It is so large for them. Look, I'm not a Tesla hater. I just think that it trades at a valuation that doesn't make sense. That's my own opinion. My own opinion. I mean, we could look at Tesla on this. I mean, people think that there's going to be that big of a jump in 2029. Maybe. Maybe. I have Tesla derangement syndrome. Very funny. Maybe. I don't know. I think it's expensive here. My own opinion. I mean, maybe this is a huge Optimus ramp over these 2 years, which I hope it is. But today it trades at a crazy valuation compared to Meta. I mean, if we look at where Meta is, Meta trades at a really low valuation with pretty damn good growth. Let's go tip ranks. See what they think about Tesla. %1 upside over the next year. Now, look, obviously analysts get things wrong all the time. Obviously. But it is a beat on where they see EPS. And then we get Meta. The analyst community believes there's a lot more upside. Yeah, Palantir actually is better valued than Tesla, and I can prove it. Like if you think Tesla is undervalued compared to Palantir, okay, take a look at the numbers. These are the analyst estimates, not mine. Palantir trades at 38 times 2028 earnings. Tesla at 124 times. Palantir has 110% EPS growth over the next 2 years. Tesla's 70%. So yes, Palantir trades at a cheaper forward valuation than Tesla, and I would rather buy Palantir than Tesla here. Just saying, I go by numbers, not vibes, not stories. I mean, I don't know. I mean, it is numbers. It's just numbers. Now, look, Tesla has an infinite TAM. Do not get me wrong. Oh, look who's here. Christopher.
What's going on, Steve?
Christopher Patel, how are you?
I had to come on because last night you guys were having a nice discussion about what's going on, and I
Why
saw
didn't you text me?
Huh?
Why
No,
didn't you text me to come on?
No. I saw it afterward because I was actually just doing something else at the time. So it was my wife's birthday, so we went out to Olive Garden.
Oh yeah, that's right.
Yeah. No, I was watching, and I was like, one of the parts that came on that was interesting was that one of the taxi drivers was talking to Amit about Micron. And
Yep.
what's interesting is, have you heard of the Ant Army in South Korea?
The Ant Army? No, I have not.
I'll play it. It's on Bloomberg. And when
Okay.
you see it, it kind of like makes you double check, like, okay, what's going on here? 1 second. Let's see if I can play. But basically, the Ant Army is like a group of like millions of retail investors that are in South Korea that are like just dumping money into the current market. And a lot of them are buying up like leveraged ETFs, like single name ETFs, and it's getting kind of out of hand. Check this out. We'll watch it together.
Okay.
1 second. I'd love to get some feedback from the chat on what they think. Check this out. It's a bit long, but it'll be good. We'll break it into pieces. Go ahead, share it. Actually, let me stop sharing and then share the actual video. 1 second. Entire screen.
You said this is on Bloomberg?
Yeah.
Okay.
There you go.
South Korea may have an ant problem. Although it's not these type of ants, but rather these.
코스피는 101%. 진짜.
Look, it's Korean Amit.
Million retail investors in South Korea who are called ants. Individually, they don't have much power, but collectively, they have a greater influence in the market.
And these ants have been busy.
Up by more than 100% so far this year. Just an unbelievable rally.
It's really quite extraordinary what's happening in Korean stocks at the moment.
The Kospi index, which tracks Korea's public companies, climbed 200% over the last 12 months. Compare that to other major markets, like the S&P or even the NASDAQ, and Korea's performance blows them out of the water.
That means it has more than tripled over the past 12 months. Retail investors, they've been the main driver of the Kospi. We can see signs of being a little bit maniac and a lot of people borrowing money to invest in stocks.
And amid the mania is a mounting fear that a bubble will soon burst.
The AI bubble debate is absolutely raging right now.
South Korea is one of the biggest beneficiaries of the global AI trade because it has two of the world's largest memory chip makers.
Korean stocks are really maximizing being beneficiaries of the AI CapEx bubble. That's the amount of money that's pouring in around the world, but particularly in the US from the mega cap stocks into building AI data centers.
So are South Korea's retail investors building towards the future, or will they get wiped out?
I don't have a strong insight of when it goes wrong. But when the AI bubble collapses, the pain in Korea is going to be extraordinary.
So before we really dive into this, let me give you the background on it. So the Kospi is our it's our version of their version of our S&P 500. The difference is, just like our S&P 500, the top 10 have like a huge concentration of Mag 7 names. The Kospi has literally 55% is in either SK Hynix or Samsung. Samsung's a little bit more diversified, but SK Hynix is a lot more focused on just the memory thing. So right now, both of these companies are just absolutely dominating that index. And what's happening is in South Korea, they just have a lot of retail investors. They're just buying into it. A lot of people are saying just buy the index, and people are buying the indexes. But then they also have single stock leveraged companies that they're buying, and a lot of them are buying these memory names. And so one of the things that we've been seeing is circuit breakers getting hit both on the way up and the way down. So it's a very interesting dynamic. And the thing is, there's 50 million people in South Korea. These two companies are at the top of their game right now. They're doing extremely well. Cash flows are amazing. But you also have a concentration in basically the same two companies. So anything happens, you get like this negative wealth effect that ends up hitting, and then you automatically put yourself in a recession, right? So imagine right now all of these people all at one time. I mean, remember the dot-com bubble, everyone was in the tech trade at the time, and then the thing burst, and then we all ended up getting a recession. And thank God at the time we had, you know, we had a surplus, and our debt to GDP wasn't that bad, so they were actually able to
Chris,
stimulate
check
their
your
way out.
mic real quick. Are you using the right mic?
Okay, let me double check. 1 second. It might. You are correct. It is the wrong mic. It's actually
No, the chat said it, not me.
Okay, let me fix that. 1 second. I got to replace the battery on my thing here. 1 second.
How many mics do you have? Or is it you have mic in the headphone and then you're also regular mic?
Yeah. So it just
Gotcha.
defaulted to the wrong mic. That's
Gotcha.
all. I just have to change this to audio. There we go. Okay. That should be better now. Yeah, so we're at a point now where just sorry, your I think your AC is I was going to say, so there's just so much concentration risk in that market, and anything happens to this trade over there, you're going to see this country get put into recession. Right now, everyone is looking at the rough estimates on all the CapEx that's going to be spent over the next few years, and how this is going to benefit companies like SK Hynix and Micron and SanDisk and everyone else. But the question that we should all sort of be asking ourselves also is, how sustainable is this CapEx build out, and who is going to blink first? Because I think we're getting closer to the day when one of the hyperscalers says to themselves, as much as I want to spend on growth CapEx, there's so much premium that I'm paying that the ROI may or may not make sense. And especially companies like Oracle just don't have that financial leverage to keep adding on more debt. They're already screaming with a ton of debt on the balance sheet. Yes, they're probably going to grow their EBITDA significantly over the next few years, but even they are starting to realize that they have concentration risk among having OpenAI being their primary customer. So the dominoes tend to be that all that RPO that you're highlighting in order to justify that CapEx, that RPO, if at any point one of the counterparties cannot live up to that contract, you're going to see like a cascading effect. And the thing is, it won't be as like, oh my God, like OpenAI went out of business and then, that's hit Oracle and then it goes all the way through. It's more like OpenAI may not be able to get as much. So they ask for what is it called? To redo some of the deal negotiations. Oracle may say, you know what, that's fine. We won't do a lot more CapEx. We'll, try to rent some of our GPUs to like other parties. And it just kind of goes from there, right? So I'm looking at this, and I'm not saying it's a bubble. I don't think necessarily that this thing is a bubble, but it's starting to kind of get to that level where there needs to be a little bit more cost rationalization in the spend. And the hyperscalers are the main drivers of all of this CapEx. So I guess right now we should really, really, really be focusing on the commentary by all the CEOs in the Mag 7. And from what I'm hearing, you're starting to already see a little bit of like waffling. Like Microsoft, like Satya already kind of came out and blew the lid a little bit and said, you know what, like he wants there to be a crap ton of models everywhere. Why? Because it sort of benefits Microsoft to have a crap ton of models everywhere. Because at the end of the day, they're going to be hosting all of those models, all the enterprise is going to buy, and Microsoft's just going to go crazy with their Azure demand. So they're fine. So I would say we have to be cautious.
Chris, let me ask you two questions. First, let's stay on this topic. Then I want to ask you about Comcast because you are a Comcast guy and up a lot today, or was up a lot. But staying on this, did you see the numbers that came out from Samsung and SK Hynix about how much they're going to spend on CapEx?
Yeah. It's
okay. $1.3 trillion over 10 years. So 130 billion a year for the next 10 years if you annualize it. And then we look at Taiwan Semi ramping CapEx this year, next year, possibly into the future. Micron coming out and saying that they're spending significantly more on CapEx. Do you think that this is a situation where these companies just have so much visibility into what is happening that they are not wrong in how much they're going to spend because they're going to be able to monetize it for the next 2 decades?
I think when it comes to a lot of the business decisions that these companies make, they make it based on what they're seeing today. And the thing is, the market has a way of throwing things off depending on certain circumstances that change. Like if you had told anyone in 2022 that AI was going to be a big thing, right? Like let's say like a month before ChatGPT came out, people would have said, bro, AI, everyone's been talking about it for the last 30 years. Like AI is just BS. And then 2022 comes, ChatGPT comes, and then Moment comes, and then all of a sudden it's like, oh my God, this is a real thing. Like what's going on here? Like this is going to be something big. So I think a lot of these companies are investing in this CapEx because they do see a lot of technology advancements coming because of AI. But I think that there are going to be periods where there has to be some cost rationalization. And I'm glad that they said it, that we're going to spend this level of CapEx over the next 10 years. And we're not just going to do like a pie in the sky number and do like 500 billion next week or some shit like that. Like they're just being very measured with it. And the other thing is like 130 billion a year for companies like this, while it does seem like a lot, like Samsung is also, remember, like a much more, it's a conglomerate, right? So they have much more than just like the memory foundry business. SK Hynix is probably trying to stay on the leading edge of things. So I would say that this is bullish, but I will also say that it's more likely that they end up back at their at the same margins that they had prior to this current build out run up. So if you're modeling your company's earnings based on that margin coming back down to, back to what it was before, the gross margin back down from like, I think it's like 80 something now to back down to like the 40s, you can see that, yes, while these companies will do well, I don't necessarily think like as an investor, you're going to get a crazy amount of juice going forward, and that's under the current assumption that we have a ton of CapEx by the American hyperscalers. Like I said, everything depends on the hyperscalers right now. And the one thing the hyperscalers are noticing is every time they say we're going to spend more money, all of these guys, these middlemen, they all start raising their prices. They all start to say, hey, why should I even try to negotiate? Nah, I just want more money. So now the hyperscalers are like, did we make a mistake by putting out too much forward, what is it called? Bullishness on this thing? And now all of a sudden they're feeling the pain of it. So I'd say just we have to, like I said, I think right now, if I was any of the hyperscalers, the first thing I would do is I would try to get my share price higher. Like the one thing the hyperscalers are all dealing with right now is they're getting killed right now in the equity markets, right? Like some of them are trading at, like Microsoft is trading at like a 17-year low in terms of a forward enterprise value multiple. So a lot of them are probably saying to themselves, okay, it's important that we do this build out, but if we're paying 200, 300, 400 times what we were paying a year and a half, 2 years ago, and the reason why is because everyone kind of figured out that we were so bullish on this thing, maybe we need to take a step back. And there is a point where we're not going to be in CapEx growth mode. We're going to be in maintenance mode. And from every projection that I'm seeing, that maintenance projection mode starts to land in 2028. Now, what does that mean for us as investors? It means that, oh, that means 2027 is going to be a great year. And it's like, you would think that, but the market tends to be forward looking. And we're already halfway through 2026.
The question becomes, what does maintenance mode look like? And then two, is 2028 actually going to happen? I mean, I can't answer that. I would think maintenance mode is kind of status quo where we are, but I don't know. When these companies are spending that much more on CapEx, I just have a hard time believing that they're willing to do that instead of buybacks if they're not thinking that this is going to last longer than 2 years.
I mean, the build out is definitely going to last longer than 2 years. Like I'm not going to deny that. I think AI is here, is here to stay. But at some point, you have to, like I said, you have to cost rationalize and saying, if I am paying this crazy amount of premium to all of these middlemen, does it make sense from an ROI standpoint to actually be out there? The other challenge that you have is right now, the total ROI is not necessarily completely like quantified yet, So I while they are probably making some money, I'd say the forward rate of return is probably going to be lower than the current projections. And this is just my assumption. Don't take it, like, oh my God, this guy is saying this. AI is improving at such a rapid pace, but what's happening is the cost structure is coming down significantly, right? So if you look at this whole DeepSeek thing, or the open weights thing is happening. I mean, for God's sakes, NVIDIA right now, from what Semi-Analysis posted, they're starting to bully people and saying, you better stay in that NVIDIA ecosystem, otherwise we're going to come after you. I mean, that screams to me that someone is trying to keep as much dollar retention as possible. If Jensen believed that there was just so much demand in the future that he never has to worry about competition because, everyone's going to get fed, I don't think he would have gone that route. But as far as I can tell, I think Jensen is really just putting up an entire ecosystem around it to make sure that NVIDIA's market stays more durable than the current like Broadcom, Marvell, and ASICs providers that are kind of partnering now. Like it's kind of sad if you think about it. Like Jensen got stabbed in the back by Sam Altman, and Dario. Now they're making their own. Well, they're designing their own chips.
So yeah, but how much does TPU take away from their Vera Rubin systems? I can't answer that. I have no idea.
I mean, any dollar that's not spent on NVIDIA is not a dollar that Jensen gets to make. I mean, wouldn't you rather have 99.9% of the entire market to yourself? Like, why do you even want even a competitor that's like 20% cheaper than you?
Yeah, but is it even a competitor? I mean, they've specifically said that TPUs do something completely different. And
well, no, I mean, look, you've got two things. NVIDIA is the king of training. Like, there's no denying that. But at the same time, you've got more and more money right now that's being piled in. It's for inferencing. And if you can do inferencing for cheaper because you're doing it via your own silicon, makes sense, Like the growth here is not going to come from more and more training clusters. It's not probably going to come from inferencing. So just, I don't know. I would say that the current build out right now needs a period of digestion. I think the memory names kind of need a little bit of a digestion period also. So I think more than likely, we're probably going to see some flattishness on the memory names over the next probably like 6 to 12 months. And then we'll see what happens. But as far as I can tell, a dip in Micron, like a significant dip, is buyable, and a rip is probably sellable. Like this year, I probably made more money on NVIDIA than most NVIDIA investors because I've just been doing the same exact thing. Just whenever this thing dips, gets down, the RSI gets down, buy it, let it rip, sell it, and just recycle it back and forth. Because there's just so many people that when it goes down, they're like, oh my God, this is it. We're done. And then on the upside, it's the same exact thing. When it starts ripping higher, everyone's like, oh my God, this is it. It's going to break out. And they, just stays within that nice range. So I'd say the range for me right now is like it's gradually moving higher, but it's like 175 to like 225 to 250. Even Tanner, I asked him like what the target was for the end of the year, and he was like 250, which I think is reasonable. I think it's probably going to come in a little bit lower than that, but 250 is reasonable. And then next year is probably going to be the upper limit target is probably like 275, maybe 300. But you could probably like buy things up at sub 200 and sell things at closer to 250, 275, and just play that game. What do you think?
I think that if TPUs were the future, Broadcom would not be doing this. And I think that the chips in general are having a difficult time. I think they're both, Broadcom and NVIDIA are both cheap here. I firmly believe that NVIDIA is undervalued. I think Broadcom is very undervalued. I like the deal Broadcom did with Alphabet. I like the OpenAI agreement. I don't understand why it is trading off so much after earnings. And NVIDIA, I said it before. Look, NVIDIA is one of my largest positions, and it's down significantly over the past 2 months.
Yeah, but isn't it cool? Isn't it cool to see that range? Look at the range on this thing. Literally in April 1st, the thing was like 164, and then it shot up all the way to like 235. Like that is a crazy volatile move up and down. Like you should be taking advantage of that by literally selling puts when this thing goes down and then selling calls when this thing goes up and just riding the middle.
What scares me about NVIDIA, and this is why Tanner and I made a bet, and I took the under on 250 for this year, because even though I think fair value today is more like 270 based off of their profitability, I recognize that they've been unable to truly break out after the past 2 earnings.
And so can you do a 1 year instead of just the year to date, the 1 year? Yeah. And it's kind of like this for almost the entire year, man. Look at that range of just up and downs on this thing. I'm telling you, this is one of the best trading stocks. Like if you know what you're doing in terms of technical analysis, this is actually amazing. Sorry, go ahead.
No, I think that for NVIDIA not to be at all-time highs right now, after putting up 85% growth with the type of profitability and revenue they do. I mean, they did 85 billion in revenue. No, I'm sorry. Well, 85% year-over-year growth. Revenue was, hold on, let me bring it up. I hate saying bad numbers.
Yeah, but it's like, as much as I like looking at the numbers are scream to me like, okay, where should the baseline be for like, let's say a value investor to be in or whatever. But I think a lot of what you're seeing in this market is just narrative. You know, if the narrative is, oh my God, TPUs are coming and going to destroy NVIDIA's, dominant moat, then NVIDIA takes a dip. And then all of a sudden, let's say the numbers are starting to come out and numbers are, hey, NVIDIA's killing it on sales, the thing starts ripping higher again. So I think we need right now is probably not the time to be a fundamental investor when it comes to NVIDIA to the same degree that you are a technical person. Like I think technical analysis probably serves the NVIDIA investor more right now.
Let me ask you this question about Qualcomm. We were talking about this earlier. From a numbers standpoint, fundamental value investing standpoint, Qualcomm's market cap is so much lower than Broadcom, NVIDIA, and AMD. 200 billion market cap. You look at their revenue, 44.5 billion. They do more revenue than AMD. Less than Broadcom, way less than NVIDIA. But you start looking at profitability, EBITDA 13 billion, AMD 7.4 billion. And AMD's 4x larger. Now, when we look at free cash flow and what we are paying, Qualcomm's doing 12.5 billion in free cash flow. And you're paying 16 times free cash flow.
But once again, no matter how much we want to try to justify, base everything on valuation and everything else, right now everything is running on sentiment and
I get that. I get that. Yeah. So yes, everything's running on sentiment. Everything's running on the forward growth. Qualcomm puts out news on their investor day that they are entering into the server AI market. They're going to have these new CPUs in 2028.
Yeah.
From a value perspective, this looks dirt cheap. Now, the market is not respecting Qualcomm's profitability and their ability to buy back shares, which they continuously do, because their forward growth is nothing compared to these companies. So the question is there a value play here? Because the forward estimates are incorrect if their actual forte into AI works and you're paying 14 times forward, but really no growth compared to everybody else. Maybe this is wrong, and maybe they actually ramp up. Like Qualcomm could be a value play here at 200 billion.
I'm in agreement with you. I think at some point, AI is going to migrate over onto the handset, right? Like, so you need specialized chips to do it. Like one of the things about inferencing and all the quote unquote not inferencing, the agents, like, with agents are a lot more dependent on CPUs from what I hear. Okay. So one of the reasons why you're seeing this massive move up by AMD is because you just need a lot more CPUs. If you're going to run a bunch of agents, like, you give a command to an agent,
Tremendous
to do
amount.
this, that, you need a lot more CPU power than you need GPU. Like GPU gives you the instructions, but the actual like moving things around, doing stuff, that all comes from the CPU part. So AMD caught a huge tailwind on that. The question is, will that same logic kind of like translate for Qualcomm? Because if it does, and they do have like a hit among all of these, among these phone companies that eventually need like the newest Snapdragon processor with like an AI feature on it, which believe it or not, I think if I were to look at like AI use cases in the future, just give me a smarter Siri, for God's sakes. I don't know why Siri is so dumb. So I don't know. I think even Apple is probably going to end up moving towards like having their silicon have a lot more RAM on it, and have more memory on it. Sorry, and basically allow for more like agentic features on the phone. But you could be onto something. I'm actually not hating the idea of Qualcomm being the sleeper in a move higher. But once again, I'd say we have to be careful on what part of the build out that they're going to capitalize on, right? Because I think right now everyone is looking at the data center build out. No one is looking at the on-device AI market.
Right. Well, and the other thing is Microsoft's deal with NVIDIA for their new chips for the new wave of computing is very interesting too. I mean, they were working on that for 3 years without telling anybody and just introduced it a couple of weeks ago. And that could be absolutely huge. So I don't know how this is going to play out. I do think Qualcomm is undervalued. I think Broadcom and NVIDIA are undervalued. I just don't know what it's going to take for them to jump out. Let's talk Comcast real quick. How do you feel about the spin out of NBC and all this stuff?
I think it's good. I mean, a lot of these conglomerates, they're trading at like below sum of all parts. So by doing this value unlock, you're getting a pretty good deal. Like a lot of shareholders, you're basically going to get a second company that's going to be trading at a different valuation. So a lot of times what happens is when you have a conglomerate, you have a company that's like, good example is Comcast. Comcast has a parks division and an entertainment division and movies and TV shows. And then it has its cable TV division and broadband internet division, right? So the broadband internet is nice reoccurring revenue, great margins, great free cash flow. And then on the other hand, you've got this, the what is it called? The entertainment business that sometimes gets a little lumpy, but it's also one of their growers. So if you take everything together, the business looks kind of okay, right? But when you separate them out, there's actually two different valuations that you can actually measure each one against. And especially if you take the debt picture, the debt profile, and layer it, equally, depending on how you want to structure it, you get two businesses that are stronger in terms of getting market unlocking value than you do of just keeping them together. So and GE did the same thing. GE split out and Honeywell is doing the same thing. So a lot of times you have high margin, high growth businesses that get overshadowed by a larger but lower growth business, and you're basically the entire business is getting not the greatest multiple. So yeah.
I'm wondering if the dividend is going to get re-rated. I think that this is a good deal for shareholders because NBC, as its own standalone company with those media assets, could be a acquisition target and get bid up. And the nice thing for Comcast is the lion's share of the EBITDA is staying with the parent company, and they're basically loading all the CapEx into NBC. We look at Warner Brothers Discovery. We look at Lionsgate potentially getting bid up. NBC may be an acquisition target for somebody. I think you're going to have consolidation. They also have Peacock, which has 40 million members, which is an asset for some people. I wouldn't be surprised if Disney tries to buy them.
I don't think NBC Universal is going to be acquired by anyone. I think that they're going to try to be a standalone company because they're just very diversified. They've got a lot of IP assets.
Universal theme park also.
Yeah, they've got theme parks. So
Disney.
Yeah. I don't think that like this is being spun out specifically for a buyout for anyone. And I also think that this is not a play on trying to merge Charter and Comcast. I know some people are thinking that. I'm like, look, I don't think that would actually stand up to any regulatory scrutiny. So I don't think
I don't think so either.
Yeah.
I think that would be a very hard sell.
Yeah, it would be. You would create literally a monopoly on the cable broadband market for the entire country, and that's not going to happen. Like you've got regional players, but no one like literally that's like merging number 1 and 2. Like it's like merging Apple and Microsoft. Like not going to happen. You know, I think that there's just a lot of value in the space, and I think a lot of people are overlooking it because everyone is looking at all the competition. They also have balance sheets that are pretty stretched, so that doesn't help. Well, Comcast doesn't, but Charter does. But the thing is, like, if you're looking at this company from like equity standpoint, they still have tremendous free cash flow. That cash flow over time is going to be growing because they just completed a really big CapEx cycle, and their CapEx cycle is actually starting to go down, and they've actually guided to that. And then they can buy back their shares. Now, if you could buy back maybe $4 billion worth of share buybacks on a $15 billion market cap, that's a pretty good amount of money that you're going to be able to dedicate towards that. So I think Charter has actually one of the news that came out. I don't know if you saw, but they're in talks with SpaceX to possibly have a mobile service. Now, in terms of synergies, that would be amazing from a technology standpoint. Think of it this way. Right now, Charter has these relationships with a lot of their broadband subscribers, and they're also one of the largest cell phone like providers right now outside of the T-Mobile, Verizon, and AT&T giants. What essentially they're doing is a strategy called convergence. I mean, we spoke about this. I'm not going to go into length with it, but the point is there are a lot of cross-selling opportunities, and partnering with SpaceX would be amazing because SpaceX could do the terrestrial coverage outside of your home. When you're inside the home, you're getting that Wi-Fi connected directly to the cable TV providers, and a lot of them are now upgrading their system to be able to do like 2 to 5 gig up and down symmetric. So there's also a lot of the cell phone companies. They were using. You know what? I'm not going to go too much into it. There's just a lot of stuff to cover. So, yeah.
All right. Let's I got to get going soon, but before we do, let's take a look at the stock draft.
Yeah.
Maddie's in first place.
Yeah, that SpaceX short is helping him, man.
Maddie's in first place. Little SpaceX short pushing him up, and his biggest loser is not even down 6%.
Yeah.
Whereas Captain Sleepy Time has 3 losers down almost 10%. And then we start getting into I'm getting smoked. Got Jason. I got to fix his today at some point because the Honeywell spin out. So I got to take care of that for him. Not doing too bad. GLW keeps running. Is there anything... Given where we were, obviously we picked on a difficult day. Is How you feeling about your portfolio right now?
I'm fine. I think it's fine. Like my hope was that
Vive and
we would get.
MOH has been great for you.
Yeah, my hope was that Iren and Fluence would end up doing really well, at least for the next quarter, and then I could switch them out. Same thing with some of the other Bitcoin to what is it called? AI like companies, but that didn't happen. And whatever, it's fine. You know, it's one of those. It's one of those timing issues. You know, you can never time the markets, but I think there's still, both of those are still do fine. So I'll have to make a tough decision when we do the next draft and when we start selling, and that it's like, okay, do I think that this is one of those, you know, companies that's going to be able to recover, or is it going to be just the dog the rest of the year? And are there other possibilities to add other things to it to, you know, help up? So we'll see. I'm not sold on the idea that Iran or Fluence are you know, like they're gonna keep going lower. I think at some point they're pretty much gonna hit a base. I was totally prepared for Fluence taking a dump because there's a small cap. Like it can happen. I was not expecting this. And the reason why I was not expecting this is because I thought that they just recently had all of this energized power and that they would get like a deal signed, and that deal signing could re-rate the stock to get closer to like Nebius. That hasn't happened, but I'm not giving up on it. I think over the next year, plenty of opportunity for that to happen. So we'll see what happens with that.
And let me ask you this. What do you think of my portfolio at this point?
I mean, you're diversified. It's fine. You know, you're not concentrated in just one sector for everything. So if we do get, you know, a flip on the markets, especially because, I mean, look, me, you, Jason, and even Matt and Amit, we're heavily loaded on companies that are AI CapEx dependent. You know, so if there is any sort of notion that the AI CapEx cycle is going to continue, all of the companies that we just outlined will recover. So that's where we are.
Yeah, I wouldn't change anything going back. I mean, look, neither of us could have known that CoreWeave and Iran would be down more than 20%. I didn't think Oracle would be down this much heading into earnings, the new earnings season. Bob and MP were wild cards. Certainly didn't think Broadcom or Taiwan Semi would be down like this. I do think that I could be Tanner, you have a link. I asked you if you want to come on. We're not done talking yet. We're going to look at your portfolio. I do think that my portfolio can do really well in the second half of this draft.
Mm-hmm.
Bob is a wild card. I do think Bob can work out. I think Zeta is going to be a triple digit for me. I really do. And then we got Captain Sleepy Time. Let's look at his. Captain Sleepy Time.
The rubric, his software plays. Everyone's software plays. Whoever has exposure to some software is actually doing okay. Yeah.
Nothing in the double digits down. I mean, Palantir's starting to come back for him. Coin is not. I think Coin can work out if we can get the Clarity Act signed. Tanner's is a sleeper portfolio. I don't hate it.
Yeah.
I don't hate it. I'm a little surprised that he took Light, but you know, it is with us.
Like I said, I think a lot of us have AI CapEx heavy portfolios, so it really depends on where we're headed with this. So any notion that, you know, AI CapEx cycle is starting to come to an end, we'll all suffer.
Oh, we're all going to get screwed if that happens.
Yeah, but if
it happens, we will get screwed.
Yeah, but if the current tantrum just basically like calms down over the course of the next 6 months to a year, then it'll be fine. And then what about Amit? What's Amit's biggest position right now? That's like taking him down.
He is getting hit by Galaxy and Bloom.
Yeah, same thing.
He's 5 in double digits. That's a lot.
Yeah, I think his entire that's the thing. He doesn't have any hedges against this with like other sectors.
He
So
won.
this
He won
entire
AI or bust.
Yeah, but the thing is, he picked the best names of the AI bunch too. So it wasn't like he picked the poor ones. You know, the only one that's like non-AI CapEx is probably Rocket Lab. I think that's about it. The rest of them are either and Reddit. Reddit is also another one. Interesting.
Yeah. Well, we're going to take a quick look at the market, and then we're going to call it for the market open. Chris and I will be back at 9 o'clock tonight.
Yeah.
Let's take a look where we are. The biggest winners of the day are ASTS and Rocket Lab. The space mob rolls on. ASTS trying to get to 80. Rocket Lab 91.30. CrowdStrike 744. Rubrik 76. Tesla 396. Amazon catching a little bit of a bid, but slipping, up 4.26%. Reddit 173.83. Nice little candles there. Like it. Nebius is up 3%. ServiceNow 101.46. Do not be surprised if ServiceNow gets back to 125 or 150 over the summer. Do not be surprised about that. Palantir, I think we've seen a short-term bottom, maybe even a bottom. We'll see. Meta 566, Zeta 1950. QXO back over 18. Oil 70.40. We just need this to stay between 65 and 75. Not going to hate oil at 70. We got Nike earnings tomorrow. We'll be looking at that. Salesforce is trying to get back to 160. NVIDIA 194. Hood 99. TKO Group, I missed it. I liked it at 195. It's up 21 bucks. I missed it. Oracle under 150. And then we got the losers. SanDisk and Micron bleeding out a little bit. CoreWeave bleeding out. Iren, Lulu. See what happens later today, everybody.
Check out Verizon. Check out Verizon.
Verizon's getting hit today. I know that.
It's getting interesting again. I'm hoping that it gets back to the 40s. I'm about to open some spreads on this thing. If it gets back to the 40, if it gets back to like 40, I'm gonna open a spread on this thing again.
So
I'm telling you, with these low beta names, it's so it's easy money, man. Easy money. Whenever I see low beta get like killed like this, usually there's two things that you need for low beta to do really well, especially something like Verizon. And this is the secret. When the market is like in greed mode, right now, and Verizon is trading low, and you start to see like it really dip hard and you start to see the technicals get oversold, that is the perfect time. Because then what happens is if the general market takes a dip because of whatever reason, everyone jumps into the safety trade. Verizon trades at like almost a 6.5%, 7%. I think it's right now based on today's like 6.5% dividend. And the one thing that a lot of people don't know about Verizon is that Dan Schulman, for a long time, Verizon's debt to EBITDA had kind of gotten a little bit high because of all the acquisitions from a lot of the spectrum. But now their debt to EBITDA is down to like 2.2 times, 2.3 times, depending on what it is on a forward basis. So they have a lot more leverage to do share buybacks. So a lot of people that are buying Verizon, they've been buying Verizon primarily only for the dividend. But now you're also getting buybacks layered on. So
well, did you see the news today about why it's down?
They did a partnership with like British Telecom or something.
Yeah, so BT Group, and they announced the merger of their international enterprise operations into a joint venture, and they filed I don't know if what filing it was, but they filed something with the SEC
that they're going to take an $800 million I guess a loss.
Yeah, because of restructuring assets.
That's good though, man. They've been losing money internationally. Why even keep that shit around? See, this is the thing about the businesses.
Short-term hit for long-term gain. That's
right, exactly.
That's all
if you have an arm and it's rotting away, if you want to get the patient to be healthy again, you don't say like, okay, yeah, let's try to keep, dealing with this. No, you cut it off, and you cut it deep enough to the point where you don't get that infection spreading to the rest of your business. This was the same thing that United Healthcare did too. United Healthcare, they had like a Latin American business for insurance. It wasn't making money. They cut that shit out. Like, fuck it. We need to work on margins. We get enough free cash flow from our U.S. brands. Let's do what we need to do. So,
yeah, it's going to be interesting. I mean, the dividend just went back to about 6.5% or so. I think this is a nothing burger for Verizon. I think it's long-term bullish for them. So we'll see what the market does.
I mean, they've got some structural headwinds coming their way also. So don't get it wrong. Like, like this company is going to be the best thing ever.
Right.
It's just, you just have to know how to play this in terms of like options. I think options is where you're going to make more money on Verizon than just buying the stock. And the way that I'm playing this and the way that I have been playing it is just, if we get any sort of notion by the Fed that we're going to be back into a rate cutting cycle, or when we're going to be back into a rate cutting cycle, you're going to see a lot of people load up on yield, right? Verizon is also a safety play. So we and Steve, we killed it last couple of years on Verizon by doing just that, buying this stuff up when people are looking at it and saying Verizon's a dead company. And me and him are like, they're not dead. They're gonna come back, and they're gonna come back strong. And they went from like 30 to 50. I had a whole bunch of spreads, and that was like a really, really strong play for me. So whenever it comes to companies that are low beta that get sold off, those are great because options premiums are cheap, and the potential for a re-rating is actually much higher than people think. So,
yeah, no, I agree. I think Verizon is very interesting. I'm going to look more into what this deal is, and I will get back to everybody at 3:45 today for the market close. Chris and I will be on at 9 o'clock tonight to discuss something that's going to be very interesting. All right, everybody, please go follow Chris on X.
Later, guys.
Please like and subscribe if you enjoy the content. I will be back at 3:45, and then Chris and I at 9 o'clock. Have a great afternoon, everybody. Get something good for lunch. Talk to you later.
Take care.